Good afternoon, this is Sean Golden with Golden & Golden, here to discuss the basics of what do you do if you're a foreign person, non-resident alien, and you're interested in investing in U.S. property, maybe owning some rental, turning around and flipping it. Let's go through the basics. So one nice thing about the United States is, unlike many other countries, you're able to pretty much invest in real estate when you want. You don't have to be a citizen or resident of the United States in order to acquire real estate. Several other countries have various hurdles that you have to kind of get over in order to make the purchase. Not so much here. When it's time to purchase U.S. Rental property, there's three main considerations. There's are you purchasing it to rent it? Are you purchasing it to sell it? Are you planning on gifting it? Let's go through the basics, right? Let's say you're purchasing it for rent first, right? When you're renting property, it's considered passive income, right? It's passive income. It's not employment. It's not consulting. And it's U.S. sourced. What does that mean? That means that the U.S. is going to put their little grubby hands on it and they're going to tax your income, even though you may reside outside of the United States. Its tax is FDAP, fixed, determined, annual, periodic. All that means is it's taxed essentially as passive income, 30% withholding, no deductions, which is of course absurd, because if you have real estate property, you've got depreciation, mortgage interest, cleaning, maintenance, repairs, etc., etc. So what you can essentially do is make an election for it to be treated as ECI, effectively connected income. That means you could take all those wonderful deductions for the property, and then what you do is you file the tax return and you get taxed at the progressive tax rate as if you were residing in the United States. It could increase the reporting requirements, having to file the returns each year, but and claim the deductions and all of that good stuff. But at the end of the day, it's ordinarily way more profitable to do it that way than just to get taxed 30% straight on rental income. The sale of property, other transfers can get complicated because of FIRPTA, Foreign Investment and Real Property Tax Act. The idea is, when you're a non-resident alien, most capital gains, not most, but a lot of different types of capital gains sourced from the United States are not taxable. Well, that doesn't include real estate. You sell real estate, it's taxable. So when it's time to sell, if you fall under FIRPTA as a non-resident alien, well, guess what? The U.S. is going to withhold normally 15% of the sale price, not of the gain. So you might have $1 million property, you're selling it for 1.2. There's going to be a significant withholding, even though 15% of the gain is way different than 15% of the sale price. At the end of the day, you end up getting that money returned, the difference, when you file. Sometimes you could file an A288B withholding exemption, certificate exemption, so that you don't have to have that withholding, or the amount of holding is minimized. In addition, this is another sort of pitfall you have to be cautious of. If you're a foreigner and you're gifting U.S. real property to another person, well, there's some immediate gift tax consequences. It's not like other types of gifts where you just kind of track it, and then at the end of the day determine how much gift tax exemption you have left. And if you've gone over, then you have to pay tax on it. The estate does. It works a little differently. You get immediately taxed after the $15,000 annual exclusion. You essentially get taxed 40% on the transfer of the real property, even though under other circumstances, other types of gift, other scenarios, you don't get taxed. There's no immediate gift tax consequence. In addition, if a foreigner owns U.S. property and they pass away, there's no $11.2 million gift and estate tax exemption. Instead, it's $60,000. So some significant planning should go into it if you're a foreigner who's considering owning U.S. property. If you're out of compliance, if you used to be a U.S. person, or if you're one now and you haven't been doing everything correctly, there's various procedures you can use to safely get into compliance. There's VDP. There are the streamlined procedures, reasonable cause, and the delinquency procedures. We have lots of free information available on our main website, goldenlawyers.com. You can always reach out and schedule a reduced fee initial consultation if it's appropriate to your matter. Again, my name is Sean Golden with Golden & Golden. Thank you for your time. Enjoy the rest of your day.